Intel began the week with a critical board meeting and ended it with reports of Qualcomm approaching for a potential acquisition, along with $5 billion investment offer from Apollo. How do these developments alter the investment thesis for Intel, and should investors adjust their position based on this news?
Everyone knows I've been critical of Intel forever. I want to see what happens. I think Qualcomm would be a great target. Apollo, maybe I like Apollo, but maybe not so much. But I do want to see what happens here. Now, for the percentage gain that it had, it was just people front running the trade to see if it does get acquired, they're already positioned in. But if I would have heard a stronger company, I would be more bullish on this. But same in the Nike and 23, you need an entire revamping of that C-suite. I think you're just making a wrong product at the wrong time. And even if you get up to speed, it's going to take a few years, even with the money that's come from the White House. It's still going to take time to get up to fabricate everything that you need. So I don't think they'll ever be back in pole position. But if a stronger company got behind them, maybe. Going back to your point earlier, Troy, as people need to build their own chips, it'd be interesting to see which players come in and may partner with or look to acquire. If this was a Microsoft or an Apple or Oracle, I would be much more excited. Qualcomm isn't a bad target, but it's not enough for me to move the needle to then want to invest in Intel. And if we're going to be very honest, if we're looking at the chip space, data center space, anyone in the AI ecosystem, they're probably third or fourth to last. That's a great investment. Oracle's better, Nvidia is better, AMD is better, AVGO is better. Shit, Tesla's better.
Shout out to Tesla.
Yeah, it's ancillary companies that are just performing way better than them at the time when this is the hottest market on earth. You're flopping. So
it's interesting because if you look at the numbers, Intel's brings in more revenue than Qualcomm. The biggest, and they actually compete in some similar categories, PCs and laptop chips. The problem is this, and we can continue to say it. Intel is still working in the CPU model, the central processing unit. The rest of the space is working in the GPU market, which is the graphic processing unit, which is why NVIDIA leads, right? And so that's a drastic difference. If Qualcomm does figure out a way, and I'm sure the government will have something to say about that, acquire Intel, there's a company that's going to benefit.
Yep.
And that's the company that manufactures its chips for Qualcomm. And that company is Taiwan Semiconductor.
Yep.
Intel, to its credit, still manufactures its own chips, but they're just doing it, like I said, for CPUs.
It's the wrong chips.
They're doing the wrong chips. And so they've missed out on the AI boom because they're making the wrong chips, right? It's obvious. Like, you're not making the right chip. This boom is based on GPUs. You're not making those. Qualcomm is making those. They have contracts with Apple, they have those contracts to use the chip. So they're in the race, right? They're actually in the race where you're not in it. It makes sense
at all
to try to figure out acquisition. But I think the beneficiary of it is TSM, right? Because Qualcomm's not saying we want to make our own. They're saying we want to acquire you, right? Because there is business there. You have infrastructure. At some point, will they look at the machinery and they'll look at the technology that Intel has and say, okay, maybe now, seeing what you have, we could potentially produce our own? That might happen.
That may happen.
That takes time.
That take a long time.
And until that time, you're gonna have to go with what you know works, and that's the company that we've been talking about for, at least 5 years. In TSM. So I think they're the beneficiary of it all if that acquisition does happen.
For the audience, to give you a comparison, Intel is selling you a car where you have to get up in the morning and crank it for a minute. Everybody else has push to start. They're just in the wrong business altogether. Like, no one even wants a CPU. It's not the target that you can sell. And once again, the profit margin is 3.1%. The hottest market on earth to invest in. They're taking 3% out of it.
Yeah.
So let me ask you this, as far as on the educational side. What are the most important indicators you analyze before buying a stock?
Number one, I talked about this at InvestFest. Had a ball. Thank you guys again. But number one, what competitive advantage does that company have that no one else can do? That's most important. No one can make the chips that NVIDIA can at this moment. If they could, they wouldn't have this lead. Number two, profit margin. So for every dollar that comes in, how much of it do they get to keep? Do you get to hire better employees? You get to have better research and development. Product line goes out faster. Number three, can they dominate that space for a 10-year period and not have many competitors? Now, when you look at Palantir, even though I may not from an ethical standpoint like it, over a 10 or 15-year period, there's not many people who can enter that space or acquire those contracts. And then number four, does a CEO or founder have amazing character while having capability to scale to dominate the globe in their space? Apple, even though I hate the new phone, Apple's founder, yes. The CEO after Steve, yes. Tesla has issues, but Starlink, no one can own all those satellites like Elon. The barrier to entry is incredibly cost intensive. OpenAI, another one. There's other AI platforms, but they are not better. The margins are not there, and they can't innovate as fast. So those are like the core things that I'm looking for. Like, what can you do that no one else can do? Like for me, I'm able to call the prices out on stocks to where I know for a retail investor, I can almost get you close to an institutional level. Most companies, Intel doesn't have a competitive advantage. You're selling a product that no one wants right now while having low profit margin. So when you take the emotion out of it and just say, okay, what can you do that no one else can do? The CEO or founder, do they have great work ethic, trust ethic, great principle while being able to scale and profit margin? You'll be okay. That'll take out 50% of companies that you even consider to invest in long term.
I wonder, because I agree with you. I think moat is important. Leadership is important. And I wonder at what point does price action, because it can be misleading, right? If somebody told you, hey, NVIDIA is down 15% over the past 3 months, it doesn't tell the full picture of actually what's happening. So at what point does price action come into the equation? Because most people will look at it, even a Palantir, what we just spoke about. If you look at it in 2020, when it IPO'd very high, right? It falls down in 2020. It's been up 400% since. But if you just hear it's been up 400%, you might say, yeah, wow. If you don't scale out and look at the full context and perspective of the company, you're not getting the full story. So does price action come into play as well?
It's one of the last things I even consider. It's one of the things that I've mastered. But if you buy the right house in the wrong neighborhood, the price, yeah, you can get some gain, but I think there's always a multiple number of variables that you need in order for a deal to go right. When things are not going well for Palantir, they didn't have those contracts on hand, and they didn't have the public favor from hedge funds and now retail traders demonized at one point. So when I go to the mathematical equation part of when to invest, those other things have to be checked off first. Like I have a probably like 15-step process that I go through before I want to invest in the company. Price is probably like the last consideration.
Yeah. McKinsey, reputable source for financial information, has Palantir as the 9th most important AI stock. Because of kind of what you just alluded to, it has 44 hedge funds that are investing in it. Yeah. And I don't like it ethically. I can argue 9th is too low. They're the only AI company that is involved in real global infrastructure. So if we do break out into a war with China, God forbid we don't, that war, like you go on YouTube and Instagram and see the drone fights that are happening, it's not going to be boots on ground. It's going to come down to data and intelligence. So to me, they may be 5th or 6th if we're looking at a long-term horizon. And one thing we know about this country is as beautiful and amazing as it is, we're going to stay in war. We got to figure out a term bigger than they got, like a Pacific Ocean around their business model. You can't just pop up overnight and
hop in ChatGPT and make that business model and make it work.
Mm-mm.
So, yeah.